Hey guys, what's going on? I'm going to take a look at Hedera Hashgraph. Ticker for this is HBAR and currently on the weekly time frame. I think I've covered this coin about 5 or 6 times already, but if it's your first time here, if this is the first Hedera video that you've ever seen on my channel, I'll just kind of give you a macro overview on the higher time frame and just kind of show you what I'm seeing here. Before I do that, a couple things. If you're not subscribed and you want to get notified when I release these videos, click subscribe, click the bell, click on all. And also, if you're looking for an exchange to trade these assets on, one that won't ask you to submit your personal documentation, I'll put a link to the one I currently use in the pinned comment and the description. You may need a VPN to use it though, depending on where you are. So I'll also put a link to a promotion on a VPN. Okay, Hedera, if you're going to trade this, these are the levels that I recommend that you draw on your chart. So obviously this lower region right here, this support line, just take the trend line and connect this bottom here. Connect these 3 bottoms right here. And obviously if Bitcoin crashes, you can look to this lower trend line as a potential support level. Okay, this downsloping level of support, it's actually not relevant anymore. So I'll just get rid of that. There was a trend line right here that was relevant, but not anymore. I'll just kind of draw that on so you can see what used to be the a very important level. It was right here. So you see we had this diagonal resistance level, 1, 2, 3 touches right here. The price was fighting to get above it. Once we broke above it, the price came back to retest it as a support level. Now, if you're a relatively experienced trader, you will know that when you break a long-term strong level of resistance, it's very common for the price to retrace and come back to test it as a support level. That's exactly what happened here. But yeah, there was a lot of weakness in the market and the price sold back down and tested it again for a second time, at which point the price broke to the upside. So I'm going to get rid of that. That's no longer in play. Now this right here is the most recent down-sloping resistance level that we just broke, okay? So it was resistance here, 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 multiple touches on it. We had a little bit of a fight with it right here. We broke out, we retested it. And now the price is just kind of wedged between this resistance level and the support level, okay? So I'll zoom in just so you can see what's happening here. So where we are right now, if you look left, I'm going to kind of zoom in so you can get a better look. This horizontal support line dates back to all the way over here. It was the peak of these wicks. It was support right here for about a month. When we broke below it, it was resistance for another 2 months because these are weekly candles. When we ultimately broke above it, the price came back to retest, got rejected here, and it was support for another about 6 weeks. And then once these candle bodies started closing below it, that's a sign that the price was in trouble. It's a big sign of weakness. We dumped all the way back down. Okay, so right now, if you look where we are, we're right at that same line again. And this time it's not the support, it is the resistance, right? So now this line, it's going to act as a support level or resistance level. It just depends on where the price is in relation to it, okay? So we're below it. So right now it's acting as a support. And this line you can see is so significant that we had this massive spike up. But when this candle closed, the body closed right below the line. Look at that. The sellers came in, push it all the way back down. That's crazy. So knowing that, if you see a candle body close above it, that's a sign that the bulls are starting to take control and you can look for potential long positions. Now, the next level that I would personally look to target if we do start closing weekly candle bodies above this level is going to be up here, right? So that's going to give me a good trade opportunity, which I imagine is going to have a very solid risk-reward ratio. So for example, let's say theoretically the candle body closed right here and that was my cue to go long. If I entered here, let's say, I can place my stop loss below this support level, which is the current resistance level, and I can target the upper range, right? The next horizontal resistance region. This particular trade would give me a risk reward ratio of almost 1 to 6. So it'll be 1 to 5.97. I could potentially get 36% to the upside while risking only around 6% to the downside. So that's one trade that I'm going to keep an eye open for. And guys, I'm not sure if you know this, but when you put a trend line on TradingView, you can right click and you can add an alert to the line. So you can say you want to be alerted when the price is crossing above, right? So you could be alerted, keep an eye on it, but don't get too excited until you wait for the candle close on Sunday evening, right? These candles close every Sunday evening. Okay, and I already mentioned it. The next level that I recommend you draw on your chart is this horizontal line right here, which again serves as a support or resistance, just depending on where the price is in relation to it. So as we come up, there's a lot of history with this line being a resistance, right? So this is where the price sold off pretty heavy last time we came to it. So you can expect that sellers are going to be looking at this level once again. And then if I look left from there, you see it was support right here. And that's pretty much all the history we have with this level. It was resistance here, it was support here. Keep an eye out for it. Now, one thing that is quite promising is this is a potential double bottom, okay? And there's a very bullish sign that was put in as this occurred. So I'm going to change the chart. And this time I'm going to show you, where's the chart right here? So different chart, same time frame, weekly. What I want to show you is this. So you see we have the, we had a low, then we had a higher low on the price, right? But if you look at the oscillator, we had a low, then a lower low on the price on this stochastic oscillator, right? Now, this is what's called a hidden bullish divergence, and it gives you early warning that the trend is likely to change. And these on a higher time frame like the weekly are quite significant. Okay, so I'm going to switch the chart back now, and you may be wondering what these levels are. So if this level breaks, these are the next levels of resistance that I'm going to look to, okay? So the way I got that, I just took a Fibonacci retracement. I ran it from the top down to the bottom, and it gave me these projection levels, okay? So you see the 382, the 50, the 618. And I don't normally like to take trades just based off of Fibonacci extension or retracement alone. What I like to do is look left and see if I have confluence with the price action, right? So the 382, a little bit right here, not too crazy. Let's go up to the 50, somewhat, but this right here, this 618, you see this level was support for quite a while right here. So as the price comes to this level, I'm going to be quite confident that this level is going to serve as a pretty significant level of resistance. I'll watch for bearish reversal candles and maybe perhaps enter a short. But of course, keep in mind that if the price does come up here, that's going to be a complete change of the trend. It's going to be an uptrend, likely a strong one after being down here for so long and putting in the bullish divergence. So if the price comes up here and you decide to short, make sure you're very careful and very conservative with both your stop loss and your take profit. So for example, maybe you place your stop loss right here and you do your take profit right down here at this 50% level. It would probably give you a risk reward ratio of about 1 to 4. So that's pretty good. Then, of course, beyond that, actually, if the price does make its way up here, then I'm going to make new updated videos. So there's no need to discuss those higher projections right now. So let's dial this down to a shorter time frame and see if there's any trades that we can potentially enter right here. Or not financial advice, that I could potentially enter right here. So looking at the 1 hour, on this chart, I have the previous day low and the previous day high marked. You see right here, we're kind of like forming a base right around the previous day low. So a pretty easy trade from here, pretty low risk. I can take a, say for example, if I entered a long, right here is not ideally where I'd want to do it. I'd have to put my stop loss below this low and the previous day low, and my target would be up here. If I entered right now, it would give me a risk reward ratio of 1 to 2.75. It's okay. I would only risk 1.36% to potentially get 3.74% to the upside. What would be more ideal is if the price made its way back down here to the previous day low. That would allow me to get in with a tighter stop loss, so I wouldn't have to risk as much. So if I was able to get in right here, then I could enter the trade only risking 0.51% to potentially get the 4.62% to the upside. And this particular trade would give me a risk reward ratio of 1 to 9. That's amazing. Actually, you know what? And even if I was a little bit looser with my stop loss, I'd like to get it below this right here. Again, even with that extended stop loss, I'm risking less than 1% to potentially get almost 5% to the upside. And the risk reward ratio on that would be 1 to 5.4. Okay, so I think that pretty much wraps it up. Overall, the Hedera chart looks great. However, keep in mind that we are under a long-term level of resistance right now. I'll get rid of that. We are under a long-term level of resistance right now. In my cue personally, to take a longer-term swing trade on the weekly time frame, targeting this level up here, is a candle body on the weekly time frame closing above this horizontal level of resistance. All right, guys, hopefully that helped. And once again, if you want to get notified when I release these videos, click subscribe, click the bell, click on all. And if you want an exchange to trade these assets, Hedera's on there. Click the link in the pinned comment or the description. All right, guys, take care. Have a good evening. Bye.